Fintech is changing the way banking is done, making transactions faster, more efficient, and cheaper. Customers no longer have to visit their banks as digitization and automation becomes more widespread. Could technology actually be a threat to banks as they operate now? And if so, how can they change to stay relevant? I spoke with Ericson Chan, head of Ping An Technology, the largest non-SOE financial services company in China, together with James Lloyd, Ernst & Young's APAC Fintech Leader, about the future of banking. If fintech is going to bring more efficiency and transparency to banking, doesn't this mean that it will lower profit margins for banks?
Absolutely is the answer. I think perhaps even more fundamentally, a lot of fintechs are targeting specific profit pools within those banks to begin with, whether it be money transfers or FX, or whether it be unsecured lending.
A lot of new services will get things a lot more efficient, so profit margin would naturally shrink. But then it opens up a lot of a new opportunity at the same time. So a lot of the service has not been available before, but now it's become available.
You say other services will open up. What kinds of services are you talking about here?
Traditionally, I think banks will acquire customer through financial products. And after you get the financial products, and then we try to service the customer. But what we have been doing differently, we call it the S2S 3.0. It's not just sales to service, but it's genuinely service to sales.
So you offer services before you sell to them. What kinds of services are these?
Managing the traffic ticket is an ordeal in China, apparently. Even you get a parking ticket, you might not be aware. So we try to manage it through an app. If you have got a ticket, and it will alert you in a friendly way. And then if you need to settle the ticket, we can try to settle the payment for you through the linking up to your banking account. We'll have different aspects, find the best place to wash your cars, figure out where you can fix your cars, and so forth.
So you basically offer free services over an app, and then people end up using that app all the time. When they finally need a car loan, they'll go to you?
Yeah, and this is not possible before previously, because without technology, this is simply impossible.
It's a question now of just figuring out what you need to do to ensure that your customer likes using you as a banking service, as opposed to is forced to use you because you have their data and you have the customer relationship. Because I think a big macro trend we're going to see over the coming years is data ownership and data portability. Mm-hmm. So if I'm able to move my bank account as easily as I move my telco provider, are you servicing your customers in such a way that they want to engage with you, that they want to do business with you?
One of the threats I see to banking, to traditional banking, is these aggregators. You have aggregators, they can get you the best rates for loans, the best rates for mortgages, for credit cards, and then you can manage all your finances from different institutions on one app. And so that, in a sense, turns a bank almost into a utility company.
I think that intermediary layer, whether it's an aggregator, whether it's a messaging app, it could actually a whole host of things it could potentially be. So I think the threat is, if you see that profit accrues to those who own the customer relationship, and considerably less profit accrues to the product manufacturers, as it were, I think there's a real threat, in fact, as you mentioned, from some of these aggregation platforms, or indeed any other platform that begins to consume more and more of your customers' time. Because ultimately what this is about is, where are your customers today and where are they going to be tomorrow? Right
now in China, we're seeing people make transfers, they pay for many things through WeChat. Is social media and e-commerce a threat in a way to banking?
Mainland China is a global market leader when it comes to innovation and adoption of some of these consumer fintech products. Whether it's the big e-commerce players or the big messaging players or some of the other bigger technology, they can offer a system or a service or a customer experience that's 10 times better than what had gone before it. I think the difficulty in a market like Hong Kong, for example, is typically the banking services can be inefficient, but people generally have access to banking services. So for a fintech, it's difficult to understand what's a product that is an order of magnitude better, 10x what you currently have, And it's that kind of order of magnitude required to get mass consumer adoption.
Ericson, your company has already innovated to be more interactive with customers.
In addition to what we have done, and then we will engage with different healthcare providers, work with a different automobile distributor, so that they partner with them to create the whole ecosystems, so that to engage our customers. That is the future, in order to get a more insight on our customers and give them better, higher frequencies on touch points.
Right.
And that is a much richer experience for our customers.
So in a sense, the bank becomes the aggregator of all these different services.
It could be. If you do it right, it will be.
So do you think we're going to see banks building more relationships with social media, e-commerce, and messaging?
Absolutely. I mean, I think the more forward-thinking banks, as I mentioned, many of whom we're working with, are already doing that, saying this is effectively a bit of a land grab, in fact, from a data perspective. So the more data you can capture in relation to individuals or businesses and how they go about their daily life, the more you can offer them tailored services, targeted, the more you can, the more additional benefits you can provide.
The focus of today banking services is about moving your money around. But then if you look at the scope as beyond that, as how to grow your money, how do you manage your entire wealth, then it will be a little bit different. The engagement will be a lot more frequent, a lot more sticky.
You mentioned banks could help you grow your money, grow your investments. Is this going to be at a more personal level than it is now?
Definitely. I don't believe one size fits all, and it shouldn't be. And I think with the technology, with so many more ways to engage our customers, including social media, but not limited to, so many different aspects of our life you can engage and then get more insights. And then we can tailor-make, we can customize product, service individually at the right place, at the right time, so that it's a really, really right fit for everyone.
And that's where the value really comes in then.
Absolutely.
With the adoption of technology and maybe partnering up with smaller companies, I mean, there's always the concern that a lot of people are going to lose their jobs in the banking industry. Is this the case?
Yeah, I mean, I think it's a serious consideration. I mean, first and foremost, fintech often really means automation. So if you're to take banking, whether it's back middle office, insurance, obviously brokers, intermediaries, I mean, I think it's undeniable that there will be a significant impact. I think the question is, how do we balance that downside risk with the opportunity created through new technology?
When we talk about jobs in the bank, is it going to be less? I tend to think not. In fact, the jobs will be a different kind of jobs. It's not about a smaller number of jobs, but the job's nature. So it will be more so about advisory, about how to engage the customer and provide end-to-end financial solution services. So the job nature will be different and engagement will be different. The app, therefore, will be different also.
How do you see the banking industry consolidating in, say, the next 10 years? What kind of shifts are we going to see on the landscape?
I think the bigger trend is going to be the entry of technology players into financial services. Again, not likely looking to replicate everything that a bank does, but just entering from a customer experience, entering from a customer engagement perspective, and then potentially partnering with or effectively sitting on top of existing players.
Going forward, I think it's more like a different organization will work closely together. Bigger financial services institute has its place, and the niche one has their own spots also. I think there will be creating an ecosystem among the big one and the small one. There is a niche customer segment the smaller banks will be servicing. Then the big size bank would be able to provide technology behind that, provide different products to supplement, create a whole consortium, and we're starting to see that phenomenon in China already. So it's more a collaboration than consolidation going forward.
Thank you so much.
Thank you.
Now let's take a look